Hi, it's Hedeb,
Hi, I'm Wang.
and today we are analyzing Australian dollar against US dollar. Foreign exchange is the one of the largest financial market in the world. It allows us to change one currency into another. And there are four main indicators that determine the value of the currency: inflation rate, commodity price, economy growth rate, and interest rate. Australian dollar has become a popular currency to be traded. United States dollar had the most traded currency in the world, and both countries fla- has floating exchange rate.
As of the 18th of March 2018, one Australian dollar is worth 0.7771 US dollars. The Australian inflation rate has been fluctuating over the past few years. The CPI was last recorded as 1.9 at the end of 2017. On the other hand, the inflation rate in the US has been relatively more stable in the past few months, hovering around 2. However, the United States has a higher inflation rate than Australia. This means that Australia's exports will be more competitive and the demand for Australian dollars rises. This also means that there is an increase in demand for imports in the United States, increasing the supply of US dollars. This causes the Australian dollar to appreciate against the US dollar. From the graph above, we can see that the demand for US dollar shifts left as there is less demand for US exports. And the supply of US dollar shifts right as demand for imports go up. This causes the US exchange rate to decrease. I'll now talk about commodity prices. Australia is a key exporter of commodity, such as minerals and agricultural products. An increase in commodity prices will cause the value of Australian exports to increase due to the higher demand for Australian dollars. As you can see from the graph, commodity prices is directly correlated to the exchange rate. US mainly exports petroleum oils and automobiles. As the trend of Australian commodity prices is rising, this may cause the Australian dollar to appreciate against the US dollar in the short run as Australian exports become more valuable.
Now let's talk about the third factor, which is interest rate. In 2016, Gill and Stephen, the governor of Australia, decided to fix the interest rate at 1.5%. From that time, the Reserve Bank of Australia decided to keep the interest rate and exchange at the rate of 1.5%. On the other hand, the United States interest rate is at 1.75%, and the Federal Reserve anticipates that the rate of the slightly increase. Over the last 2 years, the interest rate has been increasing significantly. The interest rate of Australia remain at the low 1.5%, which is lower than the interest rate of the United States at 1.75%. Therefore, investors will choose to invest funds in the United States instead, as they will enjoy the higher return on their investment in the United States compared to Australia. As a result, the USD currency will appreciate against AUD currency. As you can see in the graph, The higher interest rate encouraged the capital inflow, which increased the demand for the US. Also, the interest rate discouraged the capital outflow, decreasing the supply of the USD. Therefore, the exchange rate. The exchange rate rates. In conclusion, although the higher inflation rate in US will cause the AUD to appreciate against the USD over the next 6 to 6 months, we believe that the higher interest rate in US will overcome that and cause the USD to appreciate more against the AUD in the long run. Therefore, AUD will depreciate against the USD in the long run.